Hello and welcome to the XQ CPA channel, where we share with you the latest and greatest tax tips and business news. Today, we have great news for business owners. In a rare show of bipartisan cooperation, Congress has come together to unveil new legislation called the Tax Relief for American Families and Workers Act of 2024. To find out how this act will greatly benefit business owners, please stay tuned. The Tax Relief for American Families and Workers Act has been in development for months between Democrats and Republicans and would cost $78 billion. It's separated into three parts: tax relief for working families, American innovation and growth, and increasing global competitiveness. Part 2, American innovation and growth, is where the benefits from Main Street are proposed.
Deduction for research and experimental expenditures. In 2017, Congress created a tax bill that required amortization of R&D costs beginning January 1st, 2022. This change means businesses can no longer immediately expense R&D, which may result in higher tax bills. Major changes to the research and development tax credit could be coming for tax years starting in 2024, as the IRS has proposed adjustments to Form 6765 credit for increasing research activities. Extension of allowance for depreciation, amortization, or depletion in determining the limitation on business interest. Before January 1st, 2022, limitations on business interest deductions were based on an ATI, also known as adjusted taxable income, calculated without regard to any deduction allowable for depreciation, amortization, or depletion, also known as EBITDA. The Act would allow taxpayers to use EBITDA beginning after December 31st, 2023 or December 31st, 2021, and before January 1st, 2026. If the taxpayer elects to not use EBITDA, then earnings before interest and taxes, also known as EBIT, would be used instead. For taxable years beginning after December 31st, 2023 and before January 1st, 2026, ATI is computed as EBITDA. For taxable years beginning after December 31st, 2025, ATI is computed as EBIT. Extension of 100% bonus depreciation. Currently, the tax law allows 100% bonus depreciation on qualified property bought and placed in service for business after September 27, 2017 and before January 1st, 2023. Depreciation would be reduced by 20% each year until it is completely phased out by 2027. The proposed law would allow 100% bonus depreciation for taxable years beginning January 1st, 2023 and before December 31st, 2025. Increase in limitations on expensing of depreciable business assets. Section 179 expensing currently has a limit of $1 million. This deduction starts to phase out when the total amount of the qualifying property cost exceeds $2.5 million. Adjusted for inflation in 2023, these amounts became $1.16 and $2.89 million. Under this provision, the expense amount would increase to $1.29 million and the beginning phase-out amount would start at $3.22 million. This is for property placed in service for businesses after December 31st, 2023.
As you can imagine, this legislation can save business owners hundreds or even thousands of dollars in taxes. This money saved could then be reinvested into their business, stimulating economic growth. Unfortunately, with a Republican-led House and a Democratic-led Senate, getting the act passed swiftly may prove to be difficult. As a result, the Tax Relief for American Families and Workers Act may end up on the back burner. For these reasons, staying in the loop is vital in the coming weeks. Subscribe to our channel for important updates on the situation and follow our social media for all the latest tax and business news. We hope you enjoyed today's video, and we will see you in the next one. Goodbye!